I'm Tiffany Vondran with Fulton Grace, and today I have with me Tom Merritt with Summit Funding.
Thanks so much, Tiffany. I appreciate you having me on today.
Of course. Tom and I met through Core Coaching, which is a real estate and lender coaching, and we've been working together for a couple years. We work with a lot of first-time home buyers, and he's very good at educating them about the process and having them feel comfortable with moving forward with purchasing a property. So what exactly is a lender and what does a lender do?
Wow. We do a lot, but ultimately, so a lender is really at the end of the day someone that is going to help someone who's looking to purchase a property that doesn't have the cash or the means to purchase it straight up. Obviously, in this environment, in this market, homes are super expensive, and especially if you're a first-time home buyer, very few would have the means to enable you to purchase a property straight up with cash. Most people believe that you have to have at least 20% down, when the reality is, at least from a financing perspective, as a first-time home buyer, you actually only need probably as much as 3% down. So that's the first thing. But if you do save that 3%, ultimately what we do from a lending perspective is we help you navigate through what your monthly obligation is going to look like, what you can afford. Make sure that you're educated with regards to the process and the ins and the outs of purchasing a home so that ultimately you can become a homeowner and understand what your monthly obligation or your outlay is going to be. That monthly obligation is basically what I would assimilate to what most people understand as like rent. Rent, you go and you purchase, or you go and you rent a condo or you rent an apartment when you move to a new city, you pay it every single month. Mortgages are very similar. The difference between rent and a mortgage is that when you own the property or when you get a mortgage, ultimately you will own the property. It's yours to sell, and if the value goes up or if there's anything that comes along with that, you reap the rewards of the benefit. As opposed to when you rent, you don't own that property. You're just paying year after year. I think the biggest thing that really is an advantage for home buyers, at least from the lending side or from a mortgage side, is that once you lock into your mortgage or once you get that monthly obligation, your payment is set. It doesn't matter, there's mortgages as long as 30 years long, and you could have that same principal and interest payment for that full 30 years without it ever going up. We talk about inflation, we talk about everything that is happening right now in the markets, and we're seeing prices go up. But anyone who's locked into their mortgage or who has gotten a mortgage, their payment's not. It's staying the same. Whereas I'm sure that's not the same with rent right now.
No.
The market's pretty crazy right now. I've heard a lot of different things. I think a lot of people are standing on the sidelines, first-time home buyers and things. But, from an interest rate perspective anyway, which is one person's fear, because that's ultimately what's going to dictate your monthly obligation, interest rates historically are still very low. And as long as you are comfortable with your monthly obligation, then you should be fine. And that's kind of where I come in. I help with that education side of things, really help people understand what their monthly obligation looks like and how that fits into their budget, how that fits with regards to what they're going to have in terms of their financial picture moving forward. So, for anyone that's nervous, anyone that's afraid, we're there to kind of help them along. The market itself, I would say, typically when you have a lot of high inflation, when you see things going up, we see the gas and food and whatnot, including the interest rates, typically it's followed by a recession. So a recession is something where people stop buying things, the economy slows down. The way to spur growth is through cutting interest rates. So my outlook, at least for probably over the course of the next few years, and again, I don't have my crystal ball today, but is that we'll probably actually see interest rates go down. Will they hit the levels that they were before? Probably not, but they'll still be better than where they are now at some point anyway. So what do you think is going to happen with the housing market, just given where we're at right now and where things are going?
Right now we still have very low inventory, and we still have buyer demand, and I think that it's just a really strong seller's market right now, and I think it's going to balance out a little bit. Right now in Chicago it's about 1 month supply, 1.7 month supply of inventory, and I think it's going to go up to maybe 3 or 4 months supply of inventory, where it would be a little bit more of a balanced market.
Okay. Would that mean like prices would go down, do you think?
No, I don't think prices will go down. prices will still appreciate. We have, low supply and demand, so the prices won't go down. They'll still continue to appreciate, but just maybe not as much as they have been appreciating over the last 2 years.
Yeah, that makes sense. I would agree with you. I mean, the reality is 2008, we saw the kind of the market crash, and really what happened at that point was builders stopped building new housing. And so with the lack of new homes, it just grew and grew in terms of a pent-up demand, and we saw it kind of hit its peak over the course of the last 2 years when interest rates went really low. People wanted more space, people wanted to get out of the rentals and things of that nature. And so right now, yes, I think the big issue is there's just not enough supply, and obviously an increased demand. So I would agree with you. I think over the course with these interest rates, it actually is probably going to help that a little bit in terms of kind of leveling it out a little bit and really kind of put it a little bit more, as opposed to people going in and bidding $20,000 over asking. I think it's just going to normalize kind of back to the way the markets were in terms of here's the asking price, and you kind of negotiate where it comes in. So it'll be interesting. So when you were getting, I know you own, when you were going through the process, is there anything that you kind of looked at that you thought maybe you wish you would have known or wish you would have done from that standpoint?
Well, I was kind of torn between buying or renting. I was a little bit scared, so I wasn't really sure, basically if I could keep paying the payment, but rent was about $1,500 and my mortgage was quite a bit less than that. And I kind of just pulled the trigger and bought my place, and I'm really glad I did because I've been there for 7 years and I've built up equity. So I know that if I sell that place and move to another property, I have equity that I can take to that next place. Whereas if I was renting, I would have just lost all that money that I'd paid over the last 7 years.
Yeah, well, and that's I think you brought up a couple of really good points. I think first, so your actual payment went down.
Yes.
Can you believe that? So the other thing that I think is really interesting is that, again, as I mentioned, when you get into a mortgage, your rate and your payment is fixed. So obviously, as rents are continuing to go up right now, just like anything else, your payment's still the same. So obviously, you're not put under that crunch. In addition, part of your monthly mortgage payment is actually going to pay off that loan. So then when you go to pay or move to that next property, you're going to take whatever those proceeds are, pay off the current mortgage, and you'll be left with that equity. But that equity is continuing to grow every single month because you're paying it down with your loan, and obviously you're finding the appreciation, which is, again, one of the huge benefits I think of home ownership. When I think back to the first time that I purchased, and it was a while ago, but what I recognize or realize now is that especially with the first time, it's not your forever home. And so, at least from the lending perspective, we didn't really look, because they were scary at the time, at adjustable rate mortgages or any of those other types of options. And I'm not saying it's the right choice for everyone, but it is at least something to look at, because the average first-time home buyer is usually in their property 5 to 7 years. So you might be able to take advantage of an even lower interest rate with adjustable rate mortgages as opposed to going in those longer term type fixed mortgages. But those are all things, again, that we try and talk to our clients about, and just to make sure that they understand what the ins and the outs are of the different types of loans and see what fits.
Does a buyer need 20% down to buy?
Oh, absolutely not. And I think that that's one of the biggest misnomers, if you will, that's out there. Really and truly, if you're a first-time home buyer, like I said, 3% down. I usually try and strive, just kind of get you in a good spot to put 5% down. Very few people understand or recognize this, but 5% to 24.99%, so just under 25%, it's the same interest rate. You're not going to get a better interest rate by putting more down. So really, if you think about it, and this is one of those things I really like to talk to my clients about, is a way to create wealth is actually putting less down. If you think about it, when you buy a property, let's hypothetically say it's for $400,000, and it appreciates based off the whole value. It doesn't matter what you put down. So if you were to put down 10% of $400,000, $40,000, and it appreciates at 10%, you've just doubled your money. Whereas if you put down 20%, you've made a 50% return. Now don't get me wrong, 50% return is unbelievable on your investment. But just thinking about that leverage. And so a lot of people are like, well, I want to wait till I get to 20%. But at least from a financial perspective, it doesn't necessarily always make sense. You could actually get more return on your investment by putting less down, using that additional cash or that savings to invest in other things or do something from that standpoint. And I think the last point that people don't necessarily recognize is that, especially in a volatile market like it is right now, once you get into a property and you lock your interest rate and you lock your payment, you're set. Interest rates go up, you're still there. But the other thing they don't recognize is that if interest rates do go down, and I mentioned a potential recession, if we do see a recession and we do see interest rates go down, you can always do what's called refinance, which essentially means that you then get a new loan, but you can get it at a lower interest rate. So you're really at your worst case scenario when you purchase the property, at least from a lending perspective. I would assume, obviously, at least, what are your thoughts in terms of, buying now, at least from a value perspective?
I definitely think now is a good time to buy. Just from noticing rentals, there's no standard for how much a landlord increases the rent. So I've had clients reach out to me and say, oh my God, my landlord's raising my rent $200 a month. And then kind of panicking, but when you buy, your cost is set. So you don't have to worry about that payment going up.
Yeah. Absolutely, and inevitably, and there's probably only a few times in the history, and one of them obviously was caused by the lenders, values don't really go down. I think historically I've seen, again, other than 2008, historically year over year, homes appreciate between 2 to 5% on average. Obviously depends on your area and where you're at. So really when you purchase a home, you're also locking in the value side of things, and you've got that basis that in theory it's only going to continue to increase. Now how much, obviously nobody knows, but you're going to gain that in the form of equity to go purchase a new home later on down the road.
Tom, what do you think about someone that has a lot of student loans? Maybe someone that went to med school or law school and they have a lot of student loan balance. Can they buy a house?
You know what, that's a good question. And again, that's something that I've run into that, is another one of those myths. I think there's usually 3 myths that we come across. Number one, we already covered it, 20% down. You do not need 20% down. Mm-hmm. The other, one of the other 2 is essentially student loans. So student loans, what we count from a lending perspective isn't the aggregate of how much debt that you have, but it's what's your monthly obligation. Again, we understand the majority of people are going to have student loans coming out of school, so we just want to make sure that you're comfortable with the monthly obligation. And again, we run numbers, we ask literally, what are you comfortable spending on a monthly basis? I've had many clients that are attorneys, that are doctors, heck, really to be honest, anybody with any type of student loan. And what happens is they come out and they say, oh man, I can't purchase a new property. I've got $150,000, $200,000 in student loans. But the reality is they're renting a property for $2,500 a month or $2,000 a month. Well, when we crunch the numbers, it's very similar to your situation. We find out they could actually purchase, they're just fine getting approved, and their monthly obligation is actually less. So people with student loans really should not be deterred in any regard, because at the end of the day, it's a monthly obligation that they're probably going to have for some foreseeable future. And as long as you're comfortable with the monthly obligation, you should be fine.
Okay.
So, the third myth, and again, just kind of continuing on that, is just credit. And understanding that you don't have to have A+ credit. It doesn't have to be top tier. There are many different types of loan options and loan programs out there if you don't have stellar credit. It's okay. And so, what my biggest tip to anybody who's thinking about purchasing or might be in the position that they're considering it is to talk to professionals. Talk to your lender, talk to your agent. They can really help you navigate. Obviously, we do this for a living, and we can at least give you a guide and let you know where you stand. And quite honestly, if you're not ready, we'll let you know, and we'll give you the tips and the techniques and what you need to do in order to get to the point where you are in a position to purchase. And whether that is cleaning up credit, whether it's saving additional money, or whether it's obviously continuing to a couple more years of employment under your belt, we'll talk and we'll have those conversations so that you're ready to go when the time is right.
Thanks again for joining us and for busting a few myths about buying a home. If you have any questions, please reach out to us, and we would love to have a conversation about your situation and see if you can get into a home.
Thanks so much for having me, Tiffany. I really appreciate it and look forward to many more.